Hey guys, welcome back to the channel. Welcome back to another video. Today I want to talk to you about Federal Chairman Jerome Powell's speech he made yesterday. And I was thinking a little bit about it, and some of the stuff, because some of the stuff that he said, it came out yesterday, and I try to break it down into layman terms. It's like a 2-hour speech, 2.5-hour speech. I was going to sit there and look at the whole thing. But just a couple of things about the speech that struck me, and I wanted to talk about them today with you guys. First thing is basically the onset of what he's talking about, or like you'll hear a lot of people talking about in the media. Federal Chairman Jerome Powell basically said that you can expect a lot of pain moving forward until we get this inflationary thing down, right? Now, with that being said, basically, in layman terms, what he's saying is, like he said, you might feel pain in unemployment. In the jobs market. And you may feel pain, in other places. All this is saying basically is, the whole gist of the speech, the way I caught it, was this, okay? The top priority is getting down the CPI numbers no matter what. If they got to keep raising rates, they're going to raise them. They're not going to be timid with it. They're not going to tiptoe with it. They're trying to get this thing done as quickly as possible to get everything back running smoothly, right? While they're going to be raising these rates, you can expect some pain. High prices, maybe at the gas pump, with oil. In the jobs market, they're predicting, for him to say it, it's a pretty good idea that he believes this is going to happen. There's going to be a lot of unemployment. A lot of people are going to lose jobs. A lot of temporary jobs are going to be, cut. There's going to be a lot of people back out on the front looking for jobs. Now, with that being said, such is life. As an investor in the market, we're going to have a lot of panic ensuing. Especially Monday. Friday, yesterday, the market dropped. Now, it's going to be more of that to come. Now, whether it's institutional investors or regular retail investors like you and I, you can expect a drop. Is the market far from the bottom? I would say so. I don't know how deep it's going to fall, but it will fall. You got to expect it. Now, you're going to have green days. You're going to have days where you hear some good news about a company. The markets are going to go up and down. That's normal. But the one thing is this. We are going to have some lower rates. It's September. It's October. It's August now. Late August. So we can expect this to run for a while. A lot of people forecast this might take 1, 2, 3 years. I'm starting to believe that as well. But what I am doing right now, and this is what the gist of this video is about, what I am going to do, and not saying what you should do, but what you should pay attention to as a investor is, first of all, not to panic. Second of all, with the predictable thing in unemployment and rise of inflation the way it is now, and they're trying to cool it, right, as best they can. I figured I'd talk a little bit about where I'm going to put my money. And I know I started this in a couple of my other recession videos when I first, started making them a couple months back. But you have to really think about it. When you're dealing with inflation, high rates, short-term loans. They're raising the rates on short-term loans. It might be unemployment like they're talking about now. Where should you put your money? I look at a few sectors that I'm presently doing, right? The first one is the financial sector. Because they're raising rates, you know how it is as an investor. When they raise rates, bank stocks, usually benefit from that. Now, I'm an avid investor in banks and financial institutions because, in any country, with their GDP and their spending and all that, that all goes through the financial situation of that country. So the country's heartbeat is their bank. So I will always have banks. So I'm a big proponent of investing in banks. So what I'll be doing, me personally, I'll be investing building in my positions in my big three, Citibank, Bank of America, and JP Morgan Chase. The PE ratios are low right now, so that equates in long-term gains in the future, as far as, building my positions. So I'll still be continue doing that like I always do every month, dollar cost averaging and taking the, putting the money where it needs to go in the market, in my portfolio. So that'd be my first thing, financial sector. Another sector I'm gonna be looking at is retail. Companies like Walmart. Companies that have a cheap bottom line price where, any type of customer, can go in there and get a good deal. Target's another one I might be looking at, but definitely Walmart. So the retail sector. Now, if you don't want to just target a single company in the retail sector or whatever, you could target the whole sector, which would probably be better, be smarter. And I think, I'll probably look into that. So I go into a retail sector ETF, Now I don't have one on my mind, to give you right now, but that makes sense because, Christmas time is coming and you know how it is. Late November, start hitting December, we get into Q4 earnings and all of that stuff. Stocks like Nike and other stocks take off, especially with the Christmas rush. Regardless of being in, having inflation or being in any type of recession, quote unquote, you're going to have that Christmas rush every year in the stock market. Never fails. So I'll be building up my positions. I'll also be looking in the industrial sector. Companies like John Deere, Caterpillar, dealing with industrial machinery, things like that. Regardless if the market is up or down, these are necessities to life. Constantly building all over the world. And we always going to be farming for vegetables. People got to eat vegetables. They're going to have equipment breaking down. These are all good, stocks to consider. Industrial sector by itself, whatever the ETF is for that, you should check it out. Another thing, consumer staples ETFs, right? Or consumer staple companies, things that are found basically, for our comfortability as human beings. Johnson & Johnson, toilet paper companies, paper towels, ketchup, Kraft Heinz. Those are other things we can jump into. J&J, Colgate Palmolive, Procter & Gamble. These are stocks, guys, that you can jump into, for the long run, that do good in situations financially and economically like we are right now. Clorox is another one. We're going to always need bleach, people clean, and that's basically, the sectors that I wanted to talk to you about, so that's basically it, guys. I just thinking about it. I was talking about the job market and stuff, and it's sad and unfortunate, some people may lose their jobs in this, some people may, and other people benefit from that, but it's just how it is. But yeah, I just wanted to chime in a little bit, and if you could leave me a comment, tell me if y'all are going to, what's your stock market strategy, and getting back to strategy. Remember, stay on the field, not on the sideline. You got your portfolio, take a look at it, make sure it's ready, for whatever the Fed throws at us or the economy throws at you. Be prepared. If you got to move some stocks around and sell some stocks off to build positions in other ones, that's normal. So all in all, you just want to keep your portfolio healthy and stick to your own strategy and get yourself where you want to go. It takes patience, diligence, and everything like that. And I'll see you guys in the next video. Remember, like, comment, share, subscribe, help the channel grow. And I appreciate you spending the time with me. And I'll see you in the next video. Happy investing.